Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about my XDTE payout. I have a $300,000 margin position in XDTE, and we'll see how much that paid me out. It's a weekly pair. And the other big thing that I'm going to talk about is the Tesla Q4 earnings. So a lot of you notice that the majority of my equity is in Tesla. I'm going to tell you why. So we'll go over that earnings report. All right. As some of you know who have been subscribing, is on this channel, we like to invest in foundational holdings, some really good high quality foundational holdings. So I have about $321,000 worth of high quality foundational holdings, and I borrowed against that. I have borrowed $300,000. This plan entails is you're borrowing other people's money to build a stream of income. With your own W-2 money, your 1099, or however you get income from your job, you use that to purchase the S&P 500 or Tesla or Amazon or really good high quality companies. And what you do is over time, you build yourself a nice position and then you borrow against that position to invest in income funds. And so what I'm doing is I'm investing in an income fund called XDTE. XDTE, they sell synthetic covered calls and is a weekly payer. So what I did is I borrowed $300,000, and now my strategy has been I've been paying down that margin. So now that $300,000 is now worth $278,000. Goals of this is to create this income engine to portfolio. So I am no longer putting money into this brokerage account. I do put money into my Roth IRA. I do put money into my 403b, and that's putting money into really high quality dividend growth ETFs, as well as the S&P 500 and the total international market. So I have been paying weekly or whenever I get paid into those funds. And pretty much for this brokerage account, my goal is to beat the market. So I want to return more than the market. And in doing so, I want this borrowed money to be the income into this portfolio. I want to invest in funds that maintain their net asset value. XDTE so far has proven that that is the case. And then, as the growth stocks increase, you can borrow more and then you scale that whole position. All right. This is what matters, is how much we got paid. So on February 7th, we got paid $1,006.34. And the plan here is I am not reinvesting the distribution. I'm paying down my margin. All right. So my total equity value truly is $518,000, $240,000 of actual equity, or 321, but we'll talk about why it's 240, as well as the margin position of $278,000. My true equity position is $321,000, but I'm selling covered calls against my Tesla, and whatever it takes to close those positions out, they subtract from the total equity value, which is why it's $240,000 and not $321,000. So my plan here is I want both of these to be equal. So I want my margin used to be exactly what my equity is used. So I still have to pay down $38,000 more if I wanted to reinvest any other money back into XDT or use that money for something else. I think my 2-year plan is I'm going to perhaps even pay down more margin than the equity, because there's a possibility in the next couple of years I might go back to school. And when I go back to school, I might not have the ability to work for 3 years. So this will actually probably be my income. So this is we're testing the waters here. We might be using it for that. So let's paint a wonderful vision. So imagine you have this $300,000 position paid down, and every single week you get cash. Like, you're not paying any margin interest. This is what your weekly payments are looking like. I opened this position December 20th, and this is every single payment that I've received so far until February 7th, this last payment. Imagine that you're just getting this every single week, just cash. You're pretty much retired at that point. You won at life. Now, if you obviously want more, then you could obviously borrow more. But then imagine like this whole position is paid off. Nothing to worry about. You don't really care if the market's going too much up or too much down, because for the most part, you're probably going to get anywhere between $3,000 and $1,000 every single week. I mean, that $1,000 a week without a mortgage or any debt or any car payments is enough for you to live on. Some people want more. I probably want a little bit more than that, but just throwing that out there. This gets you thinking. Okay. All right, so let's go to the portfolio, because we like to, let's keep track of all the things we like to talk about, and then eventually we'll go into that Q4 Tesla report. So as you can see here, 240,000 to 34, all my different positions over here. So I'm selling 9 covered calls against Tesla, and those are dated for January 1st, 2027. There was a time where the calls that I was selling, they're printing a lot of money. However, Tesla decided to blow up last couple months, and then I had to keep rolling and I completely ran out of time rolling these positions. I can roll this to June, because now the June 2027 has been unlocked, but I just want to see what Tesla's going to do the next 6 months, because I do believe in the next 6 months, Tesla isn't really going to move that much. If anything, it'll trend down. In the long run, I think it'll go up. And then so 900 shares of Tesla, selling calls against that. And then this is my XDTE position. So as you can see, the last day, we're down like almost 3%. Last week, we were down 0.2. Last month, we're up 1.45%. Last 3 months, we're up 2.72. And then year to date, we are up 3.21. So starting January, let's look at some of these metrics here. So our margin status says low risk. We have $160,000 or a 66.94% buffer before we get margin call, which we have a lot of room. Protection, interest rate 5.25%, which my mortgage is 6.8. If I can switch my mortgage to this, I would be such a happy man, but that's a side note. But you can see interest rate here comes out to about $40 a day. Side note, if I am paying my margin down, then my daily interest rate will go down. That's one of the benefits of paying the margin down quicker rather than constantly reinvesting money, but that's for a later discussion. Now let's just go into these positions. Monitoring calls, like if you're selling a call or you're writing a call, what happens is it'll tell you if you're positive or negative depending on which way the direction goes. Like say you bought a call, you'll be plus when it goes up. But when you're selling a call, your positive happens when it goes down, because apparently it's supposed to be protection. I bought this for 112. So we'll say it right here, 112.75. Now it's worth 96.80. So if I close this position right now, I'm in the positive. So I would be in the positive, the difference between this number and this number. However, if I do close that position, that's almost going to cost $90,000 to close that position. And then let me just pull up the margin here. So if I use another $90,000, it's going to tack on $90,000 worth of interest to close those positions. I'm not going to get paid. Like I'm not going to buy more XDT that can help pay the interest. That would just close the positions. And then I'm stuck with an extra $90,000 I have to pay more interest on. It would make no sense to close those positions out right now, especially if I think the next 6 month Tesla is really not going to move. That's kind of how the Tesla position, that's why it's green when it's down and not red. Tesla has been trending down since December 17th. It's just been trending down, still in the positive, still up almost $58 or almost 20%, but it's been on a steady decline. So if you look at the last month, down 10%, last week, almost 8%, 4% in the last day. So, it's trending down. However, average cost here is $267. My real average cost is about $181. So my total return will actually be a lot more, but it says I'm up $80,000. And in a single day, I'm down $15,000. This is normal for holding Tesla. I've been holding Tesla since 2021. If you look at the first purchases, this shows a position, your margin maintenance. In case if you wanted to borrow and to purchase a Tesla position versus XTD, the maintenance is 30% and not 25%. And that is about it. So I'm just holding on long-term for Tesla, and that's going to be the driver of growth in the portfolio. Finally, XDTE. So this is a very exciting position because you get paid out weekly income. Oh, dude, weekly income checks are the best. Total market value, $284,000. So we're down $15,970 total. Margin maintenance, 25%. Tells you all the different holdings. They sell synthetic covered calls. They give you all these little metrics, the highs, expense ratios, your different yields. And you can see here that this is what they paid out. So because I own 5,641 shares, they paid me 17 cents, which comes out to $1,006. And just to, show proof that we actually do have a $300,000 position. So on the 18th, bought 100,000, no sells, just income. So this is fantastic. So essentially, if this is paid off, I'm retired. Paid off mortgage, I'm retired. Like this is fantastic. I almost want to sell my rental property and just put into XDT. We're not there yet. Okay, dokes. Let's move on to investing. So, we talked about this. I took a screenshot of this and put it into my presentation. So I hope you like the presentation. Equity 240. Again, we're paying down our margin to match what our equity is. So this will probably take me the next, 15 or 20, 25, 30 weeks to get this down. But then once it gets down, then, we'll decide if what the market's doing. So if we're going to buy more XDT, is it below my cost basis? Then I might buy it. If not, then I'm just going to keep paying this margin down. Tesla position, Roundhill position. And then this is because we are margin investors. We're using other people's money to make income. These are very important metrics to follow. So you can see here, margin used, total margin maintenance, so $81,000. As my portfolio does decrease, my margin maintenance is slightly going up, but it does get combated by the weekly payouts. So just keeping that in mind, but $81,000 still a pretty solid buffer before I get margin called. As you can see here, the interest is accruing. So usually the interest payment is about the 18th, 19th, 20th of each month. So I'll probably be getting this interest bill popping out here any moment. And then, because of the income, essentially what it's came down to. So whatever 1 week's worth of income in the fund pays that off. The other 3 is what we stack in the account. All right, let's just go to the spreadsheet here and let's talk about the actual total return. So if we compare the S&P 500 versus XDTE, so let's pull out the little index section here. Let's go to the S&P 500. For the last month, the S&P 500 is up 2.2%. XDTE is only up half of that. So it is up like 1.26%. The S&P 500 is beating the XDTE position. However, this is not accounting for the income. This right here, this price action is just the performance. However, we are getting the income. Now, I am tracking it on this sheet here. So as you can see here, this is the total market value. This is my original investment. So we are down that $15,970. However, we've been paid out $15,732 worth of income. If I did this, the total return would be less. But however, what I do to calculate my total return is I take the total income, but then I also subtract the margin and the Robinhood Gold, because that is the cost of doing business. So the actual net income is what I use to calculate the whole total return. So actually my total return is minus $1,288.79, which comes out to minus 0.43%. Now you can't gauge an investment on how it is over the short term. You could use different metrics like comparing it to the S&P 500 because that's the market and usually that's the gold standard. Owning it since December 20th and it's only February 7th is not a good indicator if this is like a really good holding or not. But however, I do think XDTE is one of the best income funds because you're not investing in individual stocks or synthetic calls because you don't have that single stock risk. You're actually investing in the index. You're not investing in individual portions that they sell synthetic calls and then put into a massive fund. They're actually selling the index. Total return is this. And then that's pretty much it for the income investing. I hope this motivates you to do something similar. Let's switch over to why I want to invest in Tesla. Okay, let's talk about the Q4 Tesla numbers because a lot of people don't understand why I'm actually investing in Tesla. And this will give you a little bit more insight on why. One of the main reasons I invest in Tesla is because they are a highly efficient company. What they've done in the last 20 years is something almost unheard of. I'm investing in Tesla not because I am obsessed with electric cars. I'm investing in Tesla because of a couple factors. I love their energy products. I love what they're trying to do with real world AI. I love that they have a very strong balance sheet. So this is one of the most important things here that I'm going to discuss is Tesla's making cash. They're making more cash on their vehicles than GM, Ford, Volkswagen. Their operating margins are almost 3 times higher than any of those companies making electric vehicles. Not only are they making more money than their gasoline counterparts, they're making 3 times as much. This is the real reason why I'm a huge investor in Tesla. So the reason anyone who's investing in Tesla right now is the full self-driving robotaxi and then ultimately the humanoid robot. And this is where the money's being made. In the next 6-12 months, Tesla is going to push out their Model 2 car. It's a little bit cheaper electric car. It's going to be a smaller vehicle, a little bit smaller than the Model 3, and it's going to be under $30,000. That is going to be a decent growth driver going up, but it's not anything that's going to necessarily move the needle that much. Cybertruck, they're still trying to ramp. Ultimately, the biggest thing that they're doing this year is robotaxi in Austin. This is going to be the holy grail moment of, is this possible to launch a robotaxi fleet using this full self-driving, just a vision-only approach? If you look at the operations here, Tesla increased their AI training compute by over 400% in 2024. If you look at the exponentials, Tesla has been massively building huge supercomputers to be processing all this vision data to drive these vehicles. Over 3 billion miles driven cumulatively on full self-driving as of January, and then completed construction of Mega Factory Shanghai. This is a really huge moment because with this full self-driving, you don't have to be a gasoline or electric car. Like, a lot of people, they're not huge into electric vehicles. That's fine. They are more efficient and cheaper to run over the long term. However, if you're not into that, the thing about full self-driving is you can slap that on any single car. So you can license that to Ford, GM, Volkswagen, Mercedes, all these different companies. I'm going to go down here and I just want to point a couple things here. I want to look at the energy generation. Full self-driving is a huge thing, but one of the sleeping giants in this portfolio is this energy division. If you look at their energy division numbers, they have been slowly but steadily increasing their year-over-year numbers at an insane rate. What Tesla does is they build these massive batteries for utility companies, and instead of having to run peaker plants or turning on secondary coal-burning plants, you could just put these massive batteries up your energy intake throughout the day, and then whenever you have these surges of energy, you could just pull from the batteries instead of turning on a second peaker plant, which is substantially cheaper. And a lot of energy companies are obsessed with this idea, and they can't make the mega packs fast enough to sell them to people. And then moving along here, let's talk about year over year total automotive revenues is down. This is a hard time for selling vehicles. Owning a car is very interest rate sensitive. So if you have interest rates that are high, people can't afford cars. If you compare this to the other automakers, minus 6% is actually pretty good. Other automakers are down almost 20%. And then year over year numbers, energy generation storage is up 67%, massive. Total revenues about the same. Nothing has changed. Operating expenses, everything the same. Now, because they didn't hit their earnings metrics, they're down on earnings per share. Let's talk about some of these things over here. Financial summary, growth in our energy and storage and services and others, growth in vehicle deliveries, but the growth in revenue has gone down because cost of goods sold, things like that. We got more higher regulatory credit, the reduced sexy lineup, the Model S, 3, X, and Y. Average selling price came down. In terms of profitability, income decreased 23% year over year, resulting in a 6.2% operating margin. Year over year, operating income was primarily impacted by the following items. Here are the different items. And then cash. So quarter end cash equivalents was $36.6 billion. The sequential increase of 2.9 was primarily the result of positive free cash flow of $2 billion. If you look at how much debt Tesla has, they have $36 billion in cash and very little debt. Very hard for a company to go bankrupt if they have very little debt. They're going to talk about different production numbers here, but I'm not too keen about that because the thing I'm focusing more on is full self-driving and storage. If you look at the storage numbers are increasing up to 11 gigawatt hours. As you can see here, there's also many more Tesla locations and increasing mobile service fleets, service charges numbers going up. This is a growing business. So again, this growth story is not over. They're going to talk about different vehicle capacities here. Most of these have been unchanged. As you can see here, market share of Teslas by region has been going up, not down. Every single Tesla bear says market cap will be going down. This is the most important stuff right here, the artificial intelligence and software and hardware. You can see here in version 11, all the different miles driven, but then on version 12, even more. So almost 3 billion miles worth of data driven. These computers are going to be driving way better than us. Moving along, vehicle and other software, as you can see here, cumulative miles or Tesla vehicles using autopilot are substantially safer than Tesla's not using autopilot versus the US average. So US average is down here. Tesla's not using autopilot, and then Tesla's using autopilot. Look how safe the vehicles are. They're going to prove that it's much safer to drive a Tesla on autopilot than it is for a human to drive. And at some point, humans might not even be driving anymore. They're going to take the steering wheels out. They're going to get the pedals out. It is going to be safer for everyone. And then you can see here the energy storage business, losing money. And then look at this exponential growth right here. I mean, this is fantastic. They just are finishing up their Lathrop factories and the Shanghai factory. So they'll be pumping out more mega packs, and hopefully we'll see a lot more sales over there. Service and others has been going up. Couple different, the outlooks here that we're going to read. Volume. With the advancements in vehicle autonomy and introduction of new products, we expect the vehicle business to return to growth in 2025. The rate of growth will depend on a variety of factors, including the rate of acceleration of our autonomy efforts, production ramp at our factories, and the broader macroeconomic environment. We expect energy strong deployments to grow at least 50% year over year in 2025. Cash, we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during the uncertain period. Profit, while we continue to execute on innovation to reduce the cost of manufacturing operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based products. Plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be produced on the same manufacturing lines as our current vehicle lineup. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner. Bunch of photos and charts. As you can hear, average cost of goods sold per vehicle. So it is Tesla is being more efficient with their money and making the vehicle much cheaper for Tesla to produce the cars. Going along, to talk about the different technologies that they're using in the Cybertruck. This is going to be the new Model Y pushout, nice and sleek. Talk about the different metrics here. Semi-factory, that's a whole different thing that we forgot to discuss. They built a lithium factory. So there's a whole bunch of growth drivers that are going to be happening. And just kind of going back to what I was saying is, the next 6 months, Tesla's really not going to move. And for the most part, because the earnings per share is down, people's algorithms and valuations are going to change. So they're going to be like, we're not going to give that $500 price valuation for the end of year. However, after the next 6 months, I want to say next 6 months, 8 months, we're going to start seeing some of that Austin robotaxi revenue. We'll actually see what those numbers are, and then we can start gauging how things are going to go. But after the next 6 months, I think things are going to get, it's very exciting now, but it's going to get even more exciting. The reasons I'm a bull in Tesla's not because I love electric cars, is because I'm really pushing for that full self-driving and that robotaxi. I mean, if Tesla moves with increasing their operating margin by 3%, it's going to be crazy how fast Tesla moves when their operating margin increases by 20%. So just keep that in mind when investing in Tesla. Now would be a great time to start picking up more shares, down almost $60, $70 from its all-time high from a month ago. Next growth drivers, battery deployments going up, new vehicle lineups coming up, and then the full self-driving, and then long term is the Optimus robot. Like that is what's going to be printing money for Tesla in like the next 10, 15 years, but the next 5 years will be the full self-driving robotaxi thing. So this is very exciting. When we really start getting into the numbers, at some point I'll make a Tesla valuation of what I think it's worth, put it out on the internet. Yeah, this is a very exciting time for Tesla, and there's not a lot of companies who are pushing growth, and they're pushing into very different multi-trillion-dollar revenue markets. Just my take, definitely ask some questions about it, but this is just a very quick run through of their Q4 numbers, some thoughts and commentary. But I hope you all have a good one, and peace.